What's up, guys? It's Angelo Koo. Welcome back. Today we have a special guest. It's David
Daykhovsky. We're getting there.
I'm sorry, David, and I was hard to pronounce that. That's a Russian last
That's right.
name.
That's right.
My Russian's not too good. So anyhow,
We'll get you there.
he's with Forbix. They do some crazy shit with lending. It's not just your standard lending, but I'll let him just fill you in really quick on what they do at Forbix.
Yeah. So essentially, Forbix, at our core, we are a lender. At heart, we do residential, commercial, construction loans, and we just, through osmosis, we have a private equity arm that in the last 6 to 7 years, we've built about 1,500 units across the country, own a few shopping centers, some car washes, repositioned some assets. So we're a little bit more experienced than your average lender, as that we are an experienced lender as well as a developer investor ourselves. That model is really based off just finding a really good, experienced developer that has boots on the ground. We back them with funds and the financing, and we are hold usually for long-term plays.
All right, guys, we're gonna dive right in. So these are the 5 secrets to unlocking your mortgage right now. As you know, a lot of people who've refinanced or bought a house the last 3-4 years ago have a killer rate.
Yeah.
How would you restructure that will make sense if they need to get cash like right now?
You know, Angel, we get that question all the time. And I literally get about 10 calls a day on the same thing. And it's usually for everyone has a different reason. Somebody has the daughter that they want to put through college. Somebody has an emergency that they need to take care of. Somebody has an investment that they was a once in a lifetime opportunity that they need to pull cash, but they don't want to touch that 2.5, 2.75 rate.
Yeah.
So today we have a lot of options where they have a line of credit, second, where they do not have to touch the first.
So the first would stay at that killer 2-3% rate. Okay.
Correct. And then we would pull a second out up to 80, 90% of the total value. So let's say they have a $600,000 first.
Yep.
The house is worth $1 million. We could pull out up to $200,000, $300,000 on a line of credit for them, where they only pay on what they use. So this is a great access for opportunity or emergency. They only pay on what they use, so if they use it and pay it back, they still have access to the money again.
Oh, so it's just like a credit card that's always there.
Correct. Absolutely correct. There's also other options where you can get a HE loan, which is a little bit different than a HE lock, which is still a second mortgage. Right. Instead of the ability to a line of credit, it is a fixed rate and it's a one lump sum. So, hey, I just need $50,000. So you
get the whole thing right there and you can just go to Vegas or whatever you want to do.
Whatever you want to do. Yeah, hopefully not go to Vegas, but yeah, you can do whatever you want to do. You know?
But you're going to take their house after, right?
You hope they put it on black and they double that up. So
okay, so you had mentioned, like 600,000. How about, obviously we're in Beverly Hills, a little higher price point.
Yeah.
We're talking 10, 20 million. How high do you guys go up on these kind of programs?
Yeah, so when it comes to seconds, especially in today's market where liquidity is a little bit tighter and risk they're watching it a little closer, when you get to your bigger properties, you have less players in the game that will lend on that, behind that big of a loan amount.
Right.
So we have certain lenders that will go up to about $3 million second. Okay. But it's got to be at a low loan to value, meaning if it's a $10 million first, $20 million first, that property's got to be worth $40 million.
Okay.
Right? So that the lender that's going in second position doesn't have to worry if the market tanks.
Okay.
It's a little bit safer in Beverly Hills and all these in this area.
Right.
But we're still in a market that's still unforeseen. It's changing every day. And liquidity is just on the sidelines right now, waiting. So it is available. Typical lines of credits are between $250,000 to $500,000.
Okay.
And then there are HE loans that will go all the way up to $3 million, like I mentioned.
So you could literally cut somebody a check for $3 million.
You can.
Okay.
You can. Now, you got to qualify for that money, but yes, you can.
But like you guys have the ability to be like, you need $3 million second, we got you.
Well, that is a banking product. And so to answer the question is yes, that's a banking product. But as well, we are a direct lender on top of being a broker. So it's kind of working with both. I can go to a bank to get the funds, or I can lend my own funds. So we have a fund where we do our own private money. We're a private money lender. And we can lend much higher than $3 million, up to 65% of the value.
Okay, and that's the question I wanted to ask.
Yeah.
So if we, a client of mine said, hey, I got this $40 million property, we got a $10 million first, I need another $10 million.
Absolutely. We can definitely work up the debt through our private money fund, and either we will participate in a portion of the debt or we'll take the entire debt ourselves, where we will gather the funds, get investors to put in the money, and be able to lend that money out. Again, if we're sitting at a 50% leverage, there is less risk for us. We're happy to do the deal. Now, we do 100% financing all the time.
As well.
Right? Because it's crossed over 65% globally. So if someone says, hey, I want to buy, I did a building in downtown, it was $2.2 million, right? Guy said, hey, look, I've got a few properties, don't want to put any money in. I put a lien across over 3 properties. Here's $2.2 million cash, bought the property, 100% financing.
Got it. But
right?
he crossed it with...
And then we refinanced down the road and paid those off. Eventually, right? Yeah, so it allowed him the ability just to go in 100% financing, not have to worry, and focus on other things. Which helped him in that case.
It kind of provided liquidity for him where there wasn't any.
Absolutely. I mean, I think we've done one where it was a blanket loan over 100 homes across the nation. It helps when they're close by, right? Like on the same street. It makes it a little easier. In this case, it was crossed over 3 different states in that type of scenario where he had like 20 homes in one state very close by, 30 homes in another, and the other maybe getting like 40 and 60.
How big of a loan was he trying to take?
It was about a $20 million loan.
That's a pretty big loan.
Yeah.
So, but that's good. That, I mean, not very many lenders can do over 8-figure loan that easily.
On that one, we participated. So we were able to participate in the debt. We got a senior first, and we participated as a second, right? So they've got somebody else with who dumped a bigger fund. And we participated. So it was nice to be able to. And again, that's kind of what separates us from most brokers you'll go to, is that we have the ability to participate in some of the debt. Right,
so it's like private money, basically.
Correct.
You guys set your own rules, basically.
In the private money space, but a lot of times what will happen is a guy will go to a lender and try to get a construction loan or a loan, and they'll say no to them based off the experience. They'll come to us and we'll go back to the same lender and say, hey, we'll back them and do a second, right? And so we'll get the senior piece to say yes to that client. We'll back them with the second, and now everybody's comfortable.
Got it, because you have your...
We have our experience in the deal. We have our money in the deal. We are, they know that if our money is in the deal, they feel a little safer because of our experience of everything we've built, that we won't lend it to them unless we believe in the project.
Sure. So your experience behind them as well.
Experience and money. Right? We're funding the deal. So we've got a risk in the game too.
Okay.
So it kind of separates us and allows us credibility with those lenders as well.
Let's just say, a lot of our clients, they own their own business. They don't sometimes show everything they make, or they don't show all their assets. So we can't really go to a conventional bank. How would you approach something like that?
Totally. There are a lot of lenders right now who have incredible products for self-employed borrowers who have the ability to write off a lot of their income. And the products really is what keeping the market going today while the rates are rising. So it's this options that a lot of homeowners today have. For example, we have the ability to use a bank statement product, where this is where we take 12 or 24 months of their personal or business bank statement.
Could we, so both? You can use both?
You can use both, right? So sometimes people don't have a business bank statement. They just deposit in their personal. It depends on the business. And so what we'll do is we'll add up all the deposits. We'll go through the bank statement, add up every deposit, 10,000, 20,000, whatever it may be. We'll put it on our spreadsheet, calculate all that, and then typically what a bank will do is they'll take a 50% standard business factoring. What do I mean by that? Meaning, if you make $1 million, 50% to run the business factor.
Got it.
That means that you made $500,000 of income I can use.
Got it.
Now I can use that without having to get a CPA involved. Right? And the reason why I say that is because if someone's business factor is not 50%, it's 20%. Like, hey, I only have a laptop and a cell phone. Everything I make, I don't really have a lot of expenses. Now I could take that 50% and give them much more income.
Oh, really? So it's not like a straight, hey, 50% of your income.
What's cool is that you can get 50% without needing the CPA. So for some guys, their business factor is really like 80%. The bank will default and give them 50, which allows them an extra $300,000 of income in that scenario. It's pretty cool.
So they can qualify
for a much bigger amount, right? So if somebody makes $1 million on the tax return, they write off $900K. They net 100, and now they qualify for a $500,000 loan, which approximately.
You can't find anywhere.
We can't find anywhere.
In LA, obviously.
On a bank statement deal, you make $1 million, your standard default is 50%, which gives you a $500,000 income, right? Which now you qualify for 5 times more than the 100,000.
Got it.
Now the rate is only about 1%, 0.5% to 1% higher, depending on your credit score. So don't forget, for you to qualify for the tax return program, you have to pay taxes.
Right.
So if you want the same $500,000, you got to pay tax on $500,000.
$500,000
twice for a jumbo loan. So you got a 2-year tax return. So it means when you're getting that better rate for using your tax returns, you're paid for it up front.
Yeah.
You paid Uncle Sam already.
Right.
100, 200K in income tax. Now you get the 5% rate
versus
a 6% rate. You didn't have to pay Uncle Sam all that money.
Writing off.
I'm not the one saying that, but you didn't have to pay
true.
Uncle Sam all that money. You're paying maybe $800 higher in payment, depending on your loan, maybe 300, 400, 5 in payment, which is only 5, 6 grand a year.
Yeah.
You already paid 4, 5, 6 up front, depending on 2 years. Now you may pay 10 up front.
Right. Based on because of your higher income. Basically.
Correct.
Got it.
Correct. So this is a lot of people are using that product to purchase higher real estate, save money from paying Uncle Sam, right? And keep money flowing within their business.
And keep it just flowing the way they normally do it.
Absolutely.
Okay.
And so a lot of people forget how much they pay up front for that tax return product. Now, there's also products out there, by the way, that are true no income products.
Okay, so when you say no income, that means like you're not even looking at bank statements.
I'm not looking at employment.
Oh,
I'm not asking you what you do.
Are those coming back already? Or they've always been there?
They've been back.
Okay.
I've been doing them for the past 5 years.
Okay,
right?
so let's just say I came to you. I have, I say I make $1 million a year, but I can't really prove it.
So let's just say you have an 18-year-old nephew who just graduated high school with a 700 FICO score and has a minimum trade line. His mom got him a credit card, right? And that credit card has been open for 24 months, or he's got 2 credit cards for 12. There is a trade line requirement, but there is no DTI requirement. So there are products out there that no employment whatsoever, no income whatsoever, no DTI. Remember, how you're qualifying for this loan is your income needs to be, let's say, twice as high as the mortgage payment.
So when you say DTI, that means debt
to income ratio, right?
So how much debt you have, how much income, and they factor that together.
Correct.
Okay.
So in this product, we eliminate that whole process.
Got it.
So there's no income verification, and you can go all the way up to $3 million loan amount with 20% down. Now, David, how is somebody going to have 18 years old and get $600,000?
Yeah.
Good question. How it always happens. Mom and dad.
Got it.
Right? So mom and dad can do a 100% gift,
Sure.
20% down on a $3 million property, put down $600K. There is a reserve requirement, so typically mom and dad have to put a little money into the account first, so kid has some money.
Right.
And it doesn't have to be kid in this example. It could be a senior citizen who has a $3 million house and can't qualify to take money out. He can use a no income product to cash out, to do a purchase. So there are the bad part about today's market is rates are high. The good part about the market is that there's a lot of options to still get financing. The bank statement product, the no income product, the P&L product, the rental cash flow product. The products are there. It's just, will it pencil? Can you afford it? Is affordability there?
So as long as you can afford it, you can pretty much structure something to make it happen.
Correct. And then remember, you're not like date the rate. It's true. You're dating the rate until the point where it drops. And here's the good news. And sometimes, I do these no income deals and the rate's around 8, 9%. Compared to the bank statement, 7, it is up there.
It's high.
It's high.
Yeah.
It is. But they're always thankful and they're always happy. And it's always happy at the end because the goal is to get the house.
Right.
The goal is to put the family in the house, in the school, the mom in the house, whatever the goal
Well,
is.
the other thing is you can get a really good deal right now because there's not a lot of people shopping, and you can go in there and maybe get 10% off the price versus 6 months or a year ago when you were paying 10% above the price.
Absolutely. The cool thing is that 15 months ago, the rate for that no income deal was 4%.
Wow.
So
4%
today,
on a-
4%.
Jesus.
So when the rate was 2.75% back for the conforming tax return deal, the no income, people were still complaining, like 4% is high. Today, it's an incredible rate, right? So all the guys who were able to get 30-year fixed, 10-year interest only, 4%, really low payments.
Very good.
Why am I saying this? It's not to tell the person who takes a no income that, oh, you got such a high rate. It's that the good news is when rates do come back down, we can refinance you into another no income product where we drop that 9 to 7, 6, 5, or wherever it may go.
when that time comes.
Correct, correct. So it's like, hey, we can get the goal achieved now.
And then, so it's a long-term play, obviously.
It's a long-term play, exactly.
Okay. So date to rate, guys, remember that.
Date to rate.
Let's just say somebody doesn't own a business, they don't work, but they can afford it somehow.
Back to that no income product, right? So so the best product for that, and I get that all the time, right? Is we love the house, or hey, I just lost my job, I need a refinance. I love this house. We don't. I'm waiting for my job. I'm getting a new one.
That's a good
whatever
reason,
it may be.
because a lot of people are in between jobs or something like that.
I get a lot of doctors out of med school who said, hey, look, I'm about to start a job. I'm about to make $300K a year, $200K a year, but I need this house now.
Got it.
So there's several ways to do that, right? And one is the no income option, where you can be able to put down up as low as 20% down, depending on your credit score. 700 credit score, 20% down. As low as 660, you can go to 25% down. So, and all the down payment can come as a gift from mom, dad, brother, sister, cousin, family member, anybody.
Okay.
So now the doctor can go purchase the home, in there, loving life, going to work, gets the job, refinances, right? With a bank, with me, with whoever, with his credit union, whatever it may be.
Yeah.
And he won. He got everything out of that what he was looking for. And that
point is, he got what he wanted, right?
Correct. That's typically the best way, is to use the no income product
to get in for now.
Correct. But again, it's affordability is the key, right? So making sure we have a plan and an exit. A lot of times when we do our private money deals, right? And this is where we lend our own funds.
This is your own money.
This is our own money. Okay. This is our own money. We never lend our own money without an exit. And what do I mean by that? Is, our money, when we lend our money, it can be on many different things. I need a fix and flip.
Right.
I need to foreclosure bailout. Yeah. I need a little bit of money to finish the project. The construction's maturing, right? Or I've got another private money loan. They won't extend me. Can you come in and save the day? So there's a lot of times when we are doing private money where we need to take some risk on, right? Typically when it comes to private money, it's the last option.
Right.
So I want to be able to sleep easy at night. I want my investors to be able to sleep easy at night.
And that happened. I called you a few months ago about somebody that needed like $2 million in 3 days. And you told me, we probably can't that fast, but we want to let you know now.
Correct.
So,
correct.
And you mentioned that you wouldn't be able to sleep at night.
Correct. Exactly. So the big key is that if we're lending our money, I want to be able to sleep easy at night. Sure. Because we're a lender, we don't have to climb the tree per se to reach the apple. I'd rather take low-hanging fruit. I'm not McDonald's serving a billion people. I'd rather make sure that our investors feel safe, that we take the low-hanging fruit, right? Low risk. Higher interest rates on our private money, right? So that they have good returns. Okay. When we lend our private money, we always are looking for where the exit's going to be, right? Because we need our money back to go and do it again, right? So this is kind of the structure of one hand feeds the other, in the sense of we do a private money loan, right, for the individual. We set up the exit, whether it be fix the credit, get the reserves in, update the house, fix whatever needs to be fixed.
Rent it out, get that income.
Correct. Yeah. And then we can use one of our products, whether it be the tax return product, the bank statement product, the rental cash flow no income product, the owner occupied no income product, or a commercial, whatever it may be.
To get them in a better position.
To get into a better position. Okay. We got our funds back, right? And then we're able to re-roll that money into other projects to help other people. Sure. So it's kind of like a self-perpetuating machine,
Machine.
Exactly. It's a machine. And it's a beautiful evolved machine from a basic mortgage shop into really an investment firm that really kind of goes to the next level.
You can kind of help everybody.
Everybody.
No matter what they're going through.
Whatever may go through. Yeah, whether it's your grandma who wants to $100,000 cash out refinance, your first time home buyer, or you want to build 500 units.
I work with a lot of developers, and they're thinking about like, hey, this is great opportunity. Let me buy this land. Let me build my dream house, or let me build an investment property. How do you feel about that atmosphere right now? Don't do it.
Don't. Not today. There's a lot of risk right now. There's too much risk. Construction lenders don't want to lend unless you have a ton of experience.
Yeah, you just mentioned that a lot of these lenders aren't even lending, period, anymore.
They're not. Yeah, they're looking very tightly. They are taking a take it or leave it stance at the moment, right, on all their construction. You have a lot of construction loans maturing that are not completed, not finished, and so we'll see what happens there. The issue with ground up construction is I get a lot of that people calling me because we are a private money lender. I do lend on land. We do ground up construction.
I sent you one of my projects. It was like 20 million and you're like,
Right. And because the risk, right? Yeah. Again, it's the risk part. And so The main thing I can compare it to is from comparing walking a dog to walking an elephant. I'd much rather them find a home and rehab it and put lipstick on a pig, as opposed to taking 2-3 years out of their life.
Yeah.
Again, I always ask, what's your experience?
I mean, 2-3 years is about the time it takes.
About the time it takes, right? To build something good, to build something and really make some money, right? To go through planning, the permits, the architectural design. Plans always change somehow.
Yeah.
Investor gets divorced, now needs money out of the project.
Partners disagree. I mean,
Something's always comes up. And if you're not experienced and you don't have a cool, calm head about you, or a partner who has a cool, calm head, depending on who you're with, then things can go wrong quick. And in today's environment, costs are up. Construction, the labor's high, hard to get, right? And so,
materials, I mean, all kinds of crazy shit.
Second funds run out and you're not able to pay on a Friday, they leave your site. And now you got to, again, so everything's got to be lined up. So if you don't have the experience, then they're going to rely on the GC experience. And now they know that you don't have experience, they're going to take you for that ride.
Got it.
So, and it's a risk thing. So with that being said, lenders right now are taking a much closer look at who they're lending on, what they're lending on, right? And so it's a lot easier to do a fix and flip than to do a ground up construction. Experience, I say go for it if you know what you're doing, if you know the risk involved.
Got it.
Otherwise, don't do it. Rather just sit on your money, put it into private money, earn 10, 12%, right? We just talked about private money right now. It can be lent at 10, 12, 13%, sitting easy and pretty without having to do and take all the risk. Somebody came up to me recently where they had a 2-unit, they wanted to develop a 4-unit.
On a 2-unit property.
On a 2-unit property, right? And an experienced GC.
Wow.
Okay, experienced GC.
Yep.
And after running the math, it would have costed him, $5 million to make $3 million.
That's not bad.
It's not bad. It's not bad. But to do that, he would need to take 3 years of his life and a ton of risk. He could have sold the property right there, which he owed $1 million, and it was worth $4 million.
Oh, so he would have made
$3 million anyway.
Did he sell it?
He's still in process of finding out what he's going to do, technically, and he's got some other stuff that we're doing. But the whole point is somebody who's experienced, who came into us and said, no, the numbers are there, arguing with us, and he is an experienced developer.
Of course.
But after about an hour of looking at numbers with number guys, he was thanking us to say, what am I doing? Why am I going to waste 3 years of my life just to earn maybe $1 million more?
Let me just
sell it. Let me just sell it, not take the risk, and roll into something else because he had a bigger, better project in near SoFi.
Got it.
Right, where there's a potential.
More potential there.
The problem is that you need number guys.
Right.
You need guys who are good. We're nerds that are good.
When I met with you and Emil over there, and you're like, you guys nerd out on this stuff, and I'm like, no, that's kind of cool, but yeah, you guys do.
We really do. We're Excel nerds.
Okay.
So we're Excel nerds that fight.
So that's why we call you a lot and we talk.
Right.
So
and I love it. I love that.
Awesome.
Yeah.
All right, guys. So again, if you're thinking about buying land or building on something, hang tight. Talk to David or a money person first, because it's really hard to get things built right now, and the costs are super expensive and they constantly go up. All right, Dave. So the last question. So if someone were looking to buy or refinance right now, what is the most important thing they need to understand?
Without a doubt, is to find out where you are on the map. I always say this is getting pre-approved is like turning on a light in a dark room. No matter what happens, you're going to at least be able to make a better decision. So whether you're refinancing, whether you want to look at a line of credit, whether you're looking to buy, whether you're looking at an investment opportunity at a rental, call your loan officer and get pre-approved. It doesn't hurt. A good loan officer will allow you to pull your own credit, because that's usually the objection is, well, I want to pull my credit. Okay, some people are sensitive, some people are not. If you can get over the credit report thing, once you do, you have the credit borrower pull their own credit or you pull their credit. Now you're past the hard part. And then you actually have your underwriters do the work to get your borrowers pre-approved. This will allow you to put ammunition in your weapon, basically. So if you find something you love, you can pull the trigger. Right? So in this market and environment, we're back to over-asking. We're back to competitive bidding wars.
In this market right now, you're talking about?
I'm still seeing it, right? I'm still getting...
On good properties.
On good properties, right? On good properties. And even on crappy properties, because developers need stuff because of the limited opportunity. Even on crappier properties, they're willing to buy it, right? Because there's still...
that's good property.
There's still opportunity. Exactly. Right. With that being said, is if you're getting pre-approved, you're giving yourself a much better opportunity to strike while the iron's hot. Because you're going to call your borrower, and then you're going to call him and say, hey, I got 3 days left.
Got it.
And it's like, hey, if I've got 5 days, it's better. If I got 7, it's even better. 30, wow, look what we can do. On a pre-approval, we can do it in 24 hours. I'm just saying that the sooner you get pre-approved, the sooner you turn on the light and you know where you are on the map.
Sure.
Now we know where we want to go, and we can know, do we take the 10 freeway, the 405, the 101, Sunset? Which direction do we take and which vehicle?
Yep.
Right? And we can use one of the product, the tax return, the no income, the bank statement. So this is all the reasons why you want to get pre-approved. Talk to a lender.
To piggyback off that, I would talk to you at least 1, 2, or 3.
Sure.
Especially one that, again, I'm not just trying to sell who
yeah.
you are and all that,
Yeah.
but talk to someone who offers a lot of different products. That way you know what you're getting is the best one, whether it be with you or B of A or Wells Fargo.
100%. Yeah, you want to talk to your bank, you want to talk to your credit union, you want to talk to a broker, right? Because a bank has a box. A bank is a box. If you fit in that box, go in that box.
Yep.
There's a reason why they're there, right? And they're a
good at
big
that.
institution. Now, if you're not a square and you're a triangle, you got to go to a broker because you can't fit a square into a round peg. So depending on, and that's the reason for the pre-approval, to identify what shape are you
are,
right? Because now we're turning on that light in that dark room. Well, I write off all my income. Cool. Bank of America, Wells Fargo, U.S. Bank, all those big banks, can't touch you. Done.
Right.
But guess what? It's okay. You actually qualify for a lot more.
Got it. Huh.
Here's the good news.
We can get you qualified.
Right? So, I used to work at Bank of America a long time ago. My wife is still the loan officer in Malibu.
Oh.
And so a lot of times it was like, hey, I've had a 40-year relationship with you. I hold a lot of money in the past. I need a refinance. Sorry. It's what have you done lately? Wow. That's the concept of let me see your 2-year tax returns.
Right.
Do you fit in the box? If you don't, thank you for your 40-year relationship. Go see David.
They can't do anything.
The good news is, usually, if they're smart loan officers, they'll talk to me and they'll know to go tell their clients to go see David. What I mean by that is a lot of my referring partners are loan officers. They're the same exact position as me.
Right.
But the issue is they run in one lane. They only have 2 products. Fannie, Freddie, tax return. FHA. Okay. What about your bank statements? What about your no income? What about your DSCR? If you have the options, now you can play around.
Kind of pivot around and
you can
make things work.
Yeah, for everybody, for you, for your family, for your agent, for your the whole team kind of feels like, okay, we're moving. And what happens is when you have those options, you start thinking bigger. Because now you're not limited.
Yeah. You have more options.
You have more options now. A lot of times I love seeing the guys who started with me 5-6 years ago when I was lending them $200,000 to fix and flip. And then I look at their tax return and it's showing $1 million, $2 million, and I remember when it showed 100,000. Wow. And we grew together in the industry, right? Wow. So it's beautiful to see that, but it only happened because he figured out his options. He's like, you can do that?
Right.
Yes, we can do that. Just call your local loan officer, find out what they can do for you, find out their products, and if they don't have some of these creative products, call someone else.
Sure. Someone like you as well.
Yeah, you call me. The number's right here.
As you guys know, it's super crazy out there right now. Rates are going through the roof. But as you know, with David, if there's a deal to be made, he's going to make it happen.
And Angel's right there with you by your side to make it happen as well.
Yeah, we'll find you the property and David will give you the money. As always, guys, please like and subscribe. And I'm sure we missed something. And if we did, hit it in the comments or contact David directly. I'll put his information in the description. And we'll see you on the next one.
See you guys.
See you guys. Thanks for watching.
You are amazing.
It's a lot easier when you're talking to
You're fucking amazing, honestly. I so appreciate you.